Hello, this is Steve Malone with ComStuffX. Hope you're doing well today and again some good trades. Two key aspects of the marketplace that are found in most trading strategies is support and resistance. They're a proven method of identifying key levels where we look for the market to either reverse off a price level or to push through it. So in today's video, I want to talk about support and resistance and how you can use support and resistance to help you define a trading strategy. So we're going to look at some support and resistance levels using the Euro Aussie. We're going to go back in time and take a look at certain levels and how these levels will see the market push back towards those levels. Make note of this. Price has a tendency to go back to where it's been before. Part of that has to do with human nature. But another part of it is the fact that price action has a tendency to push back to an area where it has found a support or resistance area, and it has a tendency to move in that area until the market determines either a retracement off that level or continuation in the bigger trend. So let's look at what is support and what is resistance. Support is simply a price level where buying pressure increases because prices move to a low point and buyers step in to buy at a good price. On the other hand, resistance is a price level that's up high, where sellers start to accumulate because price has risen so high, there are more sellers in the market attracted to that price than there are buyers. And typically what we find if price has a tendency to go back to where it's been before is we find that price reverses once a particular level is hit. So how do we define a real support or real resistance level? What are the things that we look for? And how do we use this well-defined support or resistance levels to help us trade the marketplace? Well, what we want to look for at a resistance level is what we refer to as a peak or a swing high. A peak is a highest high, and what we want to see is a lower high on either side. That's referred to as a swing high. This is a pretty good example of a fairly clean swing high. We have a high point and lower highs before it and a lower high after it. This is a good swing high. A good swing low would be something like we see over here, where we have a low, a lower low, then a higher low. That makes for a well-defined swing low. Now, it doesn't always occur that way as cleanly as we'd like. Sometimes what we're going to get is they're going to be about equal lows, and then we have this move down. Sometimes there'll be low, high like this, and it pushes up to a higher high, then back down. It's not a very clean, but still around it. What you want to be careful of is what I refer to as a pin bar high, where basically we have this tall wick, but it's unsubstantiated. There's nothing up here really holding it. It just pushed up there to a high point. What we'll want to see in any support or resistance level, any peak or any trough or swing low, is we want to see, is that level repeated? Oftentimes if we see a level repeated, like we see these two high points are fairly close to this and fairly close to that, that makes for a pretty decent resistance level that we expect the market to work off of. So let me go through this Euro Aussie going back a month and label the swing lows, basically identifying the low points here. And we'll simply go along here, and again I'm looking for those points where the market pushes down low then turns, and if we have any that are repeated, notice how this is a low point and it's repeated again. That's significant. And we have one here that's repeated here. These are significant levels that we expect the market to react to in that area. Also we have one up here, and we have one that occurred right here. You have a low, lower low, then a higher low. There's a possible one at that level right there. Now let's take a moment and mark our resistance levels. So I'll start over here. This is a resistance level right here, and I'll give it a different color. And so let's look for this. Now I'm not going to mark this one at this point. If I was just going left to right, I'm not marking this one just yet. I'll mark this one. And now this pushed up higher, and these two match this one here. And so I'll mark this one here, and I'll look to see, well, look here, you have this high, these two highs, and this one. So let's go to the high point here on this one up to this level here, and then let's mark this high point, and we'll mark this high point. And what we'll be looking for in the coming days is to see the market hit these levels and look for the reaction. Now make note, just because we have a previous support level doesn't necessarily mean that it will always be a support level. Remember this old adage when it comes to trading. Old support becomes new resistance. Old resistance becomes new support. And we'll look for the market to work off of these. Now, what we're going to be looking for is a bounce or retracement off of a level, but if the market breaks that level, we're going to look for the market to test that level and then continue in the direction of the larger trend. So as I move forward here on the chart, just looking at this 4-hour chart, we'll see what the market will do. We'll see here that the market moved back up to a previous resistance level, going back a couple of weeks right here. Just watch what the market does in this area as I move forward. Market moves down to a previous support level, breaks that support, and we get continuation. The likelihood is to see the market move down to this level here, the 2704 level. The market pushes down, bounces up a little bit, and then it hits that 2704 level. We expect then the market to continue possibly pushing down. If it breaks below that 2704, but it doesn't, it comes back up, and then we're going to look to see, does old support become new resistance back at the 2769 level? It does, and then the market pushes back down to 2704, a close below 2704, a bouncing back and forth, and then pushes up high. And look, back to a previous resistance level eventually, the market does. We bounce off of that previous resistance, and now we're starting to form, as we go into the month of June, we're starting to form a possible double top pattern here, and that's where we end on the 4-hour chart. And since now we have some additional levels, I'm going to come in here and make these levels. And what we'll look for is the market to potentially hit these levels. Now the key to this is to go down to your time frame that you normally trade, let's say a 15-minute time frame, and make note of these levels as you trade. So now that we're trading on an intraday perspective, we have identified certain levels. Also look for your level of retracement when you trade off these levels. We went up from a support level up to a previous resistance level, and look what the market did. Made a push all the way back down to a 78.6, 88.6, which this is an area to, oftentimes if the market doesn't break through this, we look for a bounce off of this. So at times, look for the market to retrace back to a level and then bounce off that level. When the market does retrace back towards a support or resistance level, use that retracement to initiate a new position. If we look back here, the market pushed up to this level here, then fell back, held that level, held that support level, and made a move up. So at this point, what we do is initiate a new long, and we already have a target in mind. And that's one of the key things about trading support resistance. When you move up in price or move down from a previous support level, in this case we were moving up from a previous support, that older support level became a target for the market to reach. Then the market moved up to another previous level that just happened to be an old resistance level. So remember again, old support can become new resistance, and this acted as resistance. Market finally pushed through it, then we look for that next resistance level. At that point, the market couldn't break above it, and we fall back down. So two things again about trading support resistance levels. When holding into a position, hold into that position until it gets to the previous level. If it doesn't close beyond that level, then look to exit the trade. If it does get above that level, like in this case, let's say we were long from here, it went up to the level, bounced around, then finally pushed beyond that level, you can hold in to your position or add to your position as you're moving up to the next level. The second way to trade support and resistance levels is once a level is reached and the market retraces off of that level, then look to initiate a new position here if that previous support in this case holds. And the market hit this once, twice, 3, 4, 5 times. The market could not drop any lower, turned, and we have a new long scenario to the upside. So at this point, as you're trading the market here, I would simply look for these levels as you trade. If new levels are defined, then go in and create those new levels. For instance, here we have a new support level. Here we'd look for the market to potentially come down to this level, but be aware that the market is more likely to go to the larger levels based on your 4-hour or 1-hour charts, especially if you're down trading on a 15-minute or 5-minute charts. So in review, support and resistance levels are reference points for price behavior. And as price moves to these reference points, the support levels or the resistance levels will be tested. There is a good chance that a support and resistance level will see price reverse or retrace off these levels more so than we'll see them do a retracement off of another price level. Also, if price breaks through a support or resistance level, there's a good chance it will continue to the next noted level of a higher time frame. So using support resistance levels can be the basis of good trading decisions and a good trading strategy. Folks, this is Dean Malone with Compass FX. I hope some of the information in this video about support and resistance will help you in your trading. Y'all make it a great day. Get some good trades. We'll talk to you next time. Bye-bye.